have we got retrofit your homes here yet? No. Right, okay, well, can we move on to item 14, bi-monthly business improvement?
Staff just aren't used to us giving.
Dean's got to be here, so we're waiting for Mr.
Item 11, number
Clifton.
11.
So can we do, we've got Francis, haven't we? So I'll move another person. Francis, where's he gone? Francis, he was here, is he just outside the door?
That could be in the preamble somewhere. 'Cause that's
Chair, in that submission, it doesn't say who the contact person is at Auckland Council.
Where is the business improvement?
That's what I was saying.
Oh, Francis, welcome. We'll correct that.
Yeah, it should say that. And
oh, there's probably more to it than this, just a few pages, surely.
Yes, well, we have. Yeah, just do it again. Thank you, Francis. Welcome.
My apologies.
No, it's all right. As I said at the beginning, we're going to have a bit of a fluid meeting today.
Thank you, Madam Chair. I'm here to present to you the Auckland Council Group half-year financial results, and we do have a presentation which will be circulated to you. Just as a way of introduction, the half-year result is the consolidated group result, and it covers the period for the 6 months to 31 December 2014. The council's actual results were presented to this committee in February, and the individual CCOs presented their results to the CCO Governing and Monitoring Committee on the 3rd of March. So this report is just taking the combined view. The actual results for this year, there on the next two slides will be, I've compared it against the annual plan which we've phased. The key thing that has changed this year, and you will have been aware of it when Jenny presented the council one, is that we've adopted the new public benefit entity accounting standards from 1 July 2014. And the most significant impact that has had on council's results is the requirement for us to treat rates as to account for it in full when we actually issue the rates notices, rather than progressively over the year. In past years, it's been recognised progressively, so by half year we would have recognised half of the rates revenue. Under the new standards, we actually have to recognise the full rates revenue in July. So that has had a bit of an effect on, and we've had to restate the prior period figures as well. So these financial statements have been prepared in terms of those new standards. That is the only significant change that we've identified to date. We are working with Audit New Zealand just to ensure that there are no other significant changes that might occur, but they're unlikely. We're not aware of any. There are some minor changes that might occur around concession arrangements. Is the only one where there's still quite a bit of doubt on, but most of the others are minor changes. So if you look at the statement of financial performance, the key change, as I mentioned, is in the rates line. This year we've got effectively almost the full rate figure in there, whereas last year it would have been half. So that's the key change, and obviously that then flows down to the operating surplus that you have at the bottom, which is the 812 and the 652.50 53, which was the budget for the 6 months. So last year, those figures would have been correspondingly about $700 million lower. The key changes that I just wanted to highlight to you under revenue grants, we've had lower incoming grants. The reason for that is that there's been the spending from LTA on roading projects for the first 6 months was lower than budgeted. Under non-cash items, we don't budget for vested assets, and so the majority of the surplus higher than budget is actually due to vested assets that we receive. Those are assets that council receive from contractors or developers in lieu of a cash grant, for example. So it could be parked land or that sort of stuff. And then on the expenditure side, the employee benefits, the move there is primarily due to bringing previously outsourced services in-house, both in council and in some of the CCOs, as well as the growth that has occurred in both the building and resource consents area, where that has been higher than we'd budgeted. And then those overspends are more than offset by underspends in external supply and other costs that we've incurred. So we ended up the year with a healthy surplus of 812, but if you were comparing that to the prior year that hadn't been restated, we would have just made a small surplus. The other item there, as you see at the bottom there, is the net loss, other losses, and that comprises it's a non-cash item. It's just due to the movement in interest rates. Obviously, we have to keep resetting or revaluing our financial assets based on the current interest rates, and as those fall, and we might be having fixed borrowings at a higher rate, that just has an impact. But they will reverse because eventually we will pay the actual amount, so it is merely an accounting entry or accounting process that we go through. Last year that went positive, this year it's gone negative. It just tends to bounce around. That is something that's in the international requirements. And then on the statement of financial position, which is your balance sheet, the key change there is under current assets, where you'll see compared to 30 June, we've got 1.788 million compared to 898 million, and that is the recognition of the full rates. And so obviously we've had to, those are rates that are still to be paid in the third and the fourth installment. So, but this year we've had to recognise them, whereas in the past we'd have recognised them over the period. So really, if I could just to summarise, there's no, at a group level overall, there are no significant concerns that I wish to bring to your attention. The actual results are very much in line with where we were for the budget. And as I mentioned, the key thing to remember is that vested assets, found assets, and the net fair value losses, we don't actually budget for those because we have no idea of where they're going to go. It would be meaningless to budget for them. I'm happy to take any questions, ma'am.
Thank you. Thank you, Francis. Councillor Casey.
I'd like to hear a bit more about the in-house provision of services. I know about animal management coming in-house. Is there anything else you can tell us about?
There have been some in-house as I recall, at Auckland Transport, they've brought in a number of services as well as at Water Care. In Water Care's case, it's been around beefing up the services that, you know, the customer service area, due to the fact that they've gone to monthly billing, and therefore they have a higher level of traffic coming through there. And also the costs of having, there was some, they also last year brought in the repairs and maintenance. They had it on a contract. That's been brought in, and the full effect of that has come through this year. So those were some of the in-house.
What did Auckland Transport do?
I just need to just refresh myself. It was just, they said that these were roles that they previously contracted out. In other words, they used contractors, and they brought them in and put in permanent staff. And it was in the areas of roading, procurement, and also the Auckland Metro operations, so their bus services, etc.
Thank you. So I'll move the report. Have I got a seconder for that?
Can I ask a question?
Oh, yes, you can. Seconded by Member Typo.
I had something for him.
Sorry, Councillor Brewer?
Member Taipari? Or?
No, he
Oh,
was
he seconded.
seconding
Okay. Just on the employee benefits, Francis, we're tracking ahead of, the actual was tracking ahead of the budget there. I suppose, and it might be a question to Kevin, are we confident, and it's a question I ask every year and I get assurances every year, are we confident that we will be able to stay inside that wage and salary envelope of 719 million, because on the 6-month track we are 23 million ahead already?
Yeah, look, through the chair, we're confident we'll remain within budget overall. One of the issues we have to do, and it's a task given to the Chief Executive, and through him to the officers, to work on the best way of achieving the outcome. So some of the comments you've actually heard from Mr. Katana already are activity levels have increased. So building consents, resource consents, some of the licence and compliance areas have increased in activity levels. Inherently what that means is we incur more costs to process applications, registrations. What we then do is, in the bulk of those cases, is recover those costs. So you'll see the employee costs going up, you'll also see revenue streams going up. In other cases, there have been calls to bring some resources in-house. We've heard the animal management area. Some of things like some of the one-off events we're holding this year through some of the group in the wider sense. You know, some of the AT events and things have actually required some extra resourcing. So, no, we can't give you assurance any individual one line will remain with an exact budget figure, but the activity levels overall for council and the bottom line is what the Chief Executive and officers are looking to work to achieve the outcomes you've set.
Thanks, Kevin. I suppose the inference here is that, you know, the services, it's reported here, services provided, you know, greater services are being provided in-house, and so one would think that with that happening, that arguably our consultants and contractors' budget should be able to be better contained. But then when you look down at other operating expenses, we're 43 million. Oh no, we're actually tracking. We're tracking in the positive there. So is that a direct consequence of more in-house services that we're seeing? Consultants and contractors, the cost of that levelling out a bit?
Yeah, look, that $600 million line is made up of lots of individual entries. Part of it is definitely things like contracting costs being brought in-house. Yes, that's a component piece of it.
43 million.
Okay, because I certainly think as we track towards our annual report, that if our full-time wage and salary budget is hitting budget or is slightly over budget, it would be a somewhat easier proposition to sell if we can line up our consultants and our contractor budget, which shows where the over is compensated by the under. And I just hope that we're seeing, if there's one over, there's the other one's under, and not two overs.
If I just remind you, through the Chair, if I just remind you, and the other component pieces, with activity levels increasing, we also see a corresponding increase in revenue streams in those areas as well. So yeah, there's more than just those two
Building
components.
consents and building consents.
Sure, I know, but that's a harder one to sell, isn't it? Thank you.
Thank you. Councillor Hoss.
Thank you, Madam Chair. Councillor Brewer's kind of gone halfway through the couple of questions I was going to ask. I just wonder if, in the way this is reported, we don't want to get too fine-grained, but I think these are critical issues that are just not well understood. And thinking about how we do our reporting, first of all, I want to say thank you. This is, financial reporting is really tough stuff to get right, and I think we're starting to actually get to the meat of the issue so that we can engage appropriately and at the appropriate level, because we shouldn't really be delving down into management issues. But Councillor Brewer is absolutely right. Staff numbers are the hot button issue, and it's certainly from the Newmarket Business Association members at the Ellerslie Rotary Club meeting that I went and spoke to Councillor Brewer, staff numbers were certainly the hot topic, and you obviously keep them very well informed on that. The hard thing is how we split out that the activity rate, the number of people required to do that activity, because we certainly keep our foot to the floor requiring them to do that, the 20 working days for resource consents and all those issues, the fact that most of that is done via cost recovery, and how that actually then translates into staff. So whilst some of that is, I think, through Councillor Fletcher's committee, our Chief Executive's committee, it would be really good for transparency to just find some way of being a little bit more fine-grained in that area. Otherwise, we are inclined to just home in on staff numbers without the detail. So I was going to actually ask about the corresponding change in expenses around contractors, but that question has been asked. So I'll just ask my other question, which was around the wonderfully named, found liabilities or whatever it is. Which
Found
is
assets.
Found assets, which is like, oh good, we found another park, which is kind of how it works. Again, whilst I understand the point that's being made here, with all of those, there's then a corresponding OPEX cost, and I think it's, again, just one. I think we need to find some way of registering the whilst found asset, we put on the asset side, the corresponding OPEX is the found cost.
When we talk about found assets, just to be clear, they're assets that we actually have and that are actually operating and that we are maintaining. What happens is that as we refine our fixed assets register, and we actually go out and actually measure and make sure that the measurements that we have for the number of pipes, the lengths of pipes, etc., we're finding that sometimes those measurements are slightly out. And that's where you get the found asset coming from. They're assets that we're there, we know they're there, we're maintaining them, but it's just as we refine the fixed assets register, we're finding that we're actually under and over somewheres. And that's just a net figure that came up, yeah.
Thank you. Councillor Wood.